Hi there, Serial Trader here. I just want to do a quick update here on the S&P 500. And okay, so we did get that lower open, and we actually did close positive, although intraday we had just a massive swing. Stabbed quite a bit lower than I was even expecting. But nonetheless, did have that kind of gap down, lower open. Yes, we swung down very, very low. In fact, we took out the October 2021 low, and we also touched this July 19th, 2021 low. So we basically stabbed under a couple of prior supports, but then we had a nice swift rejection of those levels and closed up for the day. So that is a pretty bullish reversal, but it's also extreme volatility, which you would normally only see in, potentially a more volatile period to come. I mean, I don't remember this kind of volatility at least since, March of 2020, and that was pretty wild. So that's almost a couple of years ago at this point, right? Minus 2 or 3 months. Anyway, so I haven't given up on the idea that this is still an ABC expanded flat wave 4, and we're still not done this overall 5-wave sequence from the March 2020 lows. Haven't given up on the idea, but I'm certainly also now more open, given the severity of today. I'm more open to the idea that there's something else going on too. Now, I don't want to spend too much time, but let's just do a couple things. So one thing, if I zoom in here, if we go to the 1 hour chart maybe. Yeah, the 1 hour chart. So I can still make the case that we say have this 1, 2, this is the 3, that's the 4, and all of this is the 5. Okay. Now, I don't love this, by the way, so bear with me. But just to go through the thought process. So I can make this an ugly 5-wave completed, and certainly given the size of the reversal today, that could very well be the bottom, and we may be starting a new bullish uptrend. I'm not sold on that just yet. So there's also the distinct possibility that even if this is still just wave C of 4 of the expanded flat, that we're actually doing something more like this. And bear with me. Where, okay, we got this is all of wave 1. This is wave 2. This waterfall we've had is all of wave 3, which certainly appears complete today. We're now working on the wave 4 bounce. And we've certainly already put in some good work on that. And then we'd be looking for one more leg down to complete this wave 5 of potentially of CF4. Now, given how much lower it would even go if today's low wasn't a low and we have to make, substantially lower low than that, that would start arguing that this expanded flat interpretation is getting a little stretched. Because, I mean, there are limitations to how large this C wave can be versus the, proposed A and B before it. So if that was the case, and we had to adopt a different view, okay, well, we would still be looking for a 5-wave move down, right? But instead of perhaps finishing a wave C of 4, maybe it would be simply starting a much larger downtrend in, for instance, either a wave A of like a larger ABC decline, or even a wave 1 of a larger A decline, which would be even more, that'd be like a really large degree bearish decline. If this was 5 waves down just for wave 1 of the larger A of a larger ABC, I mean, then we're talking like massive, super cycle bear market or something, I would think. But dealing with the current information, no need to jump to those conclusions just yet. So I'm suspicious that today's low was the exact low, although as I say that, I also think back to a lesson I was taught by the market in 2018 here. And this ended up just being, let's see here, from the September 21st, 2018 high, we did a pretty nice decline. I think it was around a 20% drop on the S&P 500. And what we had here, what it ended up being was this. 1, 2, 3, 4, 5. And then that was the A wave down. We had this ABC running flat wave B. And then we had a C wave decline. Okay. Now, what threw me here was, okay, we had 5 clean waves to count in wave A, and then we had this ABC running flat in wave B. So I was looking for 5 waves down in wave C, or even potentially five down in 1, 3 up in 2, and then 5 down in 3. I wasn't necessarily sold that it was just going to be an ABC, but I was looking for another 5-wave decline, whether it was a third wave or a C wave, right? And when I was looking for that third wave decline, if I can get back here to an hourly chart, I have to scroll back, but I can do it. Let's try and find what I'm looking for here. Maybe a 4-hour do the trick. Yes, okay. So what I was looking at when I was looking at the C wave, I was thinking to myself, okay, we got the 1, we got the 2. This looks like all of the 3, and then I was expecting, say, this bounce here to be the 4, and looking for one more leg down to go. So I hesitated to go long here, expecting one more decline, and that decline never came. Well, in fact, it actually started to decline. I'm like, oh yeah, here we go, right? Wave 5's coming down, and then after that, I'm going to try and go long here. It came down partially, but then we took off, okay? And then I had to make the compromise. Okay, we had the 1, 2, and I had to find a lackluster wave 4 in here to settle on. So I don't remember exactly what I settled on, but it was maybe something like this. Very unappealing, but had to make do with it because that's just what the market forced. You don't always get a picture perfect wave pattern to finish. It's nice when you do. It adds confidence for me, but it doesn't always happen. So I have to also acknowledge that. So that was a lesson I learned there, that even though it looked like I needed one more leg down, it didn't happen, and I missed what could have been an excellent entry. Now, of course, I was forced to get in later at a lousier spot, but nonetheless, a lesson, I think, that you don't always get that perfect finishing pattern that you're looking for. So coming back to current times here, we could very well be in that same kind of scenario where, it would look more ideal to have this, bounce up and one more leg down in wave 5. But maybe we just don't get it. And maybe that initial uglier wave count will actually be the one that proves correct, okay? So that's some thoughts there. Now, what I also want to show is this is a 3-minute chart, so intraday to day. So I did actually make, I was already long a small position on the March ES futures, and I wanted to add to it, but I need a good reason to add to it. I couldn't just buy into this waterfall as it was happening. I could have, but I didn't want to. So what I did wait for was some sort of setup. So what we got actually was this, a nice little 1, 2, 3, 4, 5 up intraday. So I saw a 5-way move off the bottom, and I said, okay, that tells me that there's at least a bottom of sub-magnitude now in place, now that we've gotten 5 waves up. Now that 5-wave move tells you that the trend of at least one larger degree is now up. So then I waited for this pullback, which actually happened to be a pretty nice fib retracement. Let's see here. I think it just stabbed past the 50% retracement, didn't quite get to the 618 retracement. So that was and there was also the area of the prior 4th wave of 1 lower degree, which is a guideline for the depth of corrective waves. So it even worked on a small time frame here, the 3-minute chart, just like it works on big time frames. If you watch the serial trader educational video I just put up on the weekend, I think I discussed some of that in there if you're interested. And then that was my opportunity to add with an actual definable level to be bullish against, right? So I added to the March ES futures, and then we had a nice move up, and I actually closed. I didn't close all the futures, but I closed the buy I did down here up here, and I still have the original buy that I'm leaving in place. I also did something else, but we'll get to that in a moment. So the question is, does this look like just an ABC up? Well, so far it's just a 3-way move up, right? So you could argue that, oh, this is our 4th wave in development, A, B, and we're in the C. Maybe the C is almost done. That's what you would be trying to here, let's get the degrees correct here. So I gotta drop that. I gotta drop that even more. Let's see. Okay, that's under minute. That's minute. And this should be subminuet. Okay. So you could make the case that, yeah, 5 up for A, 3 down for B, and we're working another 5-wave move up for C of 4, and then going to be getting that leg down. Now, I'm not so sure, because let's throw up a parallel trend channel here. So put up a base channel, and you can see we're actually starting to break out of this base channel, which kind of is suggestive more of third wave price action as opposed to C wave price action. We're past the equality relationship. Now, there's still a long ways to go to the 1618 relationship, which was a common third wave objective. But nothing to say we have to stop here. What if we have another up day tomorrow and all of a sudden we're up near 44.75? That could certainly happen. And if it does happen, I'm going to start being more receptive to the idea that this was the big bottom, okay? Haven't seen quite enough yet to feel that confident about it, but just throwing some ideas out there right now. Okay, so yeah, the idea would be, well, maybe this is not ABC up, and maybe we got the 1, 2, and looking for wave 3, 4, and 5. And if you see a clean, larger degree 5-wave sequence up like this, let's get this up there. If you see that, then you'd be looking for another 3-wave pullback and then another 5 up, and then I think we're probably off to the races if that happens. But hasn't happened yet. Just throwing it out there, some brainstorming. Okay, so that's what I wanted to go through there for the most part, I think. And let's see here. So over to the Thinkorswim candlestick chart. Obviously a big reversal day, long lower shadow. I hesitate to call this a bullish hammer because the real body is a little too large to have the look of a hammer, but same kind of concept. You had this huge range. You opened lower, went even lower intraday, and then actually closed up not only positive for the day, but also near the high end of the entire intraday range. We are oversold on the oscillator, and it looks like we've started to curl up from the oversold condition. So there is that. Now what I did do is I put on a small, what did I do here? Get rid of this. Yeah, this is what I got. So I just put on a put debit spread on SPX options here, and it's just short term. It expires on Friday. So I bought a 42.50 put and I sold a 42.25 put. So just a vertical put debit spread on SPX options. I didn't go big, just one contract. So this is my idea that, okay, if we do have one more leg down, I'm not confident enough to really, sell future short or something, because we could keep ripping up. But I am at least putting a little hedge on in case we do get one more leg down. And you can see this costs $370, which is the maximum risk of the position, and the maximum reward is over $2,000. So I like the risk reward ratio, just a little cheap, bear play if we do have one more stab down. And if we don't, well, then I'm still long some of the futures. So that'll more than make up, well, very easily more than make up for the $370 of risk that this little option spread cost me. Anyway, back to the analysis. I guess that was just a little anecdote of what I did to take advantage of the bounce, other than selling the intraday entry I made on the futures. Yeah, I wanted to look at the volatility chart here. So VIX. So VIX, obviously we spiked up above that prior VIX spike. So there was no VIX divergence. There was on the weekend when I made the video, but today erased that divergence. But you can see we spiked up and then a huge rejection down, and we only closed up, just 3% and change for the day, which isn't much on VIX considering the day we had. So usually when you get a tradable bottom in the market, you get a VIX spike and then a big rejection of the spike. Kind of looks like what we got here, okay? And this is just a horizontal line showing that prior spike level. Again, closed well below that as well. So VIX might be showing that was an important bottom. So there's that. But then I look at the VIX VVIX tool, and ideally you get a divergence. Now earlier in the day there actually was a little divergence. You had VIX and VVIX make a high, and then at the same time, or sorry, they made a lower high, and at the same time SPX made a lower low. So there's a little divergence there, but that got erased on this final stab down, and SPX made the new low, and VVIX and VIX basically simultaneously made the new high. So there was no divergence, which I don't like. Typically on an important bottom, I like to have that divergence. So I just thought I'd point that out. Not my ideal scenario. Obviously, there's no buy signal here yet. We're still above the red moving average on VVIX. We're still below the blue moving average on SPX, and there is no VIX VVIX divergence. So I wanted to mention that. And what else? I mean, that's probably good. Basically explaining my current take on things. So definitely want to see more price action before I really form a strong opinion about what's next. And in the meantime, I am long still some March ES futures, and I do have that little put debit spread in the event that we do have another leg down in towards later on this week. And remember, we do have the Fed meeting on Wednesday, so that could certainly be a catalyst for further continuation up, or could be a catalyst for the leg down potential as well. That's why I want to have kind of both sides covered for now. Be open-minded, not attach myself to the idea that we're just going to go back up in a new uptrend, even though I'd say right now I'm 60% leaning on that being the case, and 40% leaning on this being a more bearish scenario. That's kind of where I'm at, just to give you an idea. All right, well, that is probably good for now, and we'll see what the rest of this exciting week has in store for us. Serial Trader, signing off.